Hi, I'm Jenny Regal from the SEC Small Business Advocacy Team. Thank you for joining us today for our final day of the SEC's 40th Annual Small Business Forum. Today's discussion will focus on smaller public companies, drawing insights from both small cap investors and company leadership, including Tom Hensey of Fidelity Investments and Sue Washer from Applied Genetic Technologies Corporation. Let's dive right in.
Thank you, Jenny, and welcome everyone to the SEC's 40th Small Business Forum. Welcome back for those who were with us earlier this week, and thank you for those joining us anew today. I'll add the disclaimer that the views that are expressed today by participants in the forum are those of the individuals and not the organizations that they represent. With that lovely caveat, I am thrilled today to introduce Commissioner Caroline Crenshaw to share opening remarks and to kick off day 4, our final day of the 2021 forum. Commissioner Crenshaw, the floor is yours.
Good afternoon, and thank you, Martha, for that warm introduction. And I really appreciate when you do the disclaimer. That's really helpful, so thank you for doing that. It's wonderful to be here. I really, truly have enjoyed hearing from all the panelists over the last several days, and I'm particularly interested in today's discussion focused on smaller public companies. You may not know this about me, but I am the very proud sister of an entrepreneur. My brother started his own business before the pandemic started, ideal timing. And he is the everything from the chief executive to the chief financial officer to the IT and customer service departments to figure out how to deal with the intellectual property. So I know how challenging it is to start and run your own business. I also know successful small businesses are critical to our economy. In 2019, the Small Business Administration noted that small businesses were responsible for over 40% of U.S. economic activity. Small businesses accounted for more than 60% of new private sector jobs from 2005 to 2019. Because small businesses are so important to the health of our economy, it's critical that the Commission and its staff hear from small business owners, investors, and advisors about their experiences. We need your input on what's working and what is not. We need your ideas about regulatory changes that could promote greater equity in capital access. We need your feedback about the process for initial public offerings. And we need you to tell us about any other issues faced by smaller public companies today and the potential regulatory changes that could help them continue to grow and succeed. In past forums and discussions on this topic, we have heard that there is a need to promote greater liquidity in secondary trading markets for securities of smaller public companies. I'm interested in hearing whether market structure changes could help address liquidity issues and encourage greater investment in these companies. In 2019, the Commission issued a statement noting that concurrent trading of securities on multiple exchanges may be limiting liquidity for smaller public company stocks. Would suspending unlisted trading privileges for these companies facilitate greater liquidity? And prior small business forums have also addressed the 40-year-old regulatory framework for transfer agents, the entities that facilitate the transfer, issuance, and cancellation of securities. Would a modernized regulatory framework allow smaller public companies, other issuers, and investors to work with transfer agents more effectively? If so, what disclosure requirements and internal controls are needed in today's markets? Finally, are there proxy process improvements that could create efficiencies for smaller public companies and their investors? I could continue to pose questions, but you have a lot on the agenda today, and I don't want to stand in the way. Thank you all for being here, and I'm really looking forward to today's discussion and all of your input. Appreciate you letting me make opening remarks. Thank you.
Thank you very much, Commissioner Crenshaw. We share that in common, the Proud Sisters of Entrepreneurs. We've talked about that a few times outside of these fun public events, but it brings a unique perspective when a part of your family really is working so hard as an entrepreneur and figuring out how to make all the different aspects of their business happen. Before we dive into today's panel, I want to provide a framework for you, our audience members, on how you can engage. You can start asking questions now for our audience in the Q&A, We're going to wait and ask those at the end of the discussion, but don't you wait until the last minute to send in your questions, because that makes it really hard for us to get those into the queue and over for our panelists. I want to thank you for submitting thoughtful policy suggestions in advance for consideration today. If you've got additional policy suggestions that you would like to have considered later, please feel free to chat those into the team. After the panel discussion and the Q&A, you're going to get a chance to vote on the recommendations that you think the Commission and Congress should prioritize. The poll on those recommendations is going to be visible throughout the discussion for reference, but the voting will actually open once the Q&A has ended. It is now my pleasure to introduce our Deputy Director of our office, Sebastian Gomez-Abero, to lead the next panel. And I have to give a special thank you to Sebastian. He has been an incredible leader of our team and made it possible for me to step away for a few months with a newborn and had the team in wonderful shape. It would not be our office without you. So Sebastian, please take it away for the team.
Thank you, Martha, and huge thank you to this team that has been able to put together this amazing program this week. But I am delighted and super excited about the fact of we're able to have this conversation today about small cap insights and provide perspectives on small public companies. So many companies have the goal of conducting an initial public offering, listing on an exchange, and becoming a public company. It is my pleasure to spend the last day of the forum with two thought leaders in this small cap space. I am joined today by Tom Hensey. He's the Chief Investment Officer at Fidelity, and Sue Washer, the founder and CEO of Applied Genetic Technologies Corp. I'm going to let my panelists introduce themselves before we jump directly into the why of today's discussion. So without further ado, Sue, would you kick us off by telling us a little more about yourself?
Well, I'm happy to introduce myself. I'm going to make it short since I know everyone has access to a full bio. But I have a background in biochemistry and a degree, an MBA in marketing. I spent a great number of years at very large companies, large pharma companies like Abbott and Eli Lilly. Before I jumped into the small business space, I had a number of opportunities to learn about the differences between big and small companies before taking the helm at AGTC, where I raised several rounds of private financing, took the company public and did some follow-on financing. And now we're really in late stage clinical development and pointing our products towards being able to make them available to patients. So I'm really, it's a pleasure today to work with you.
Thank you, Sue. And I'm looking forward to delving a little more onto your path to where you are now. But before we do that, Tom, could you tell us a little more about yourself?
Sure. Good afternoon. Thank you, Sebastian. Good afternoon, Sue. Yes, I've been involved in the small cap market literally my entire career. So I joined Fidelity in 1993, and since that time, I have been an analyst, director of research, a portfolio manager for our small cap value fund. And then since 2008, I've been chief investment officer. So I've had oversight of our investment teams for quite a period of time now. So I look forward to answering all of your questions.
Well, thank you, Tom. And I couldn't think of a better person than to get us started today. In particular, with a discussion of why small caps. And maybe if you can walk through from an investor perspective, what small caps companies bring to the market and why investors have historically been interested in investing in small cap companies.
Sure. Well, you think about it, small cap companies have historically been the fastest growing, most dynamic, and most innovative companies that you can invest in. Virtually all companies, past and present, all the great companies that we've seen, they started small. They started small with an entrepreneur, had an idea for a new product, a new service, a way to improve quality of life, or a way of disrupting a way of doing something that's already in existence today. And so it's always been a very exciting part of the market to invest in. And then from an investor's perspective, all of this innovation creates the opportunity, but it also comes with risk. And so investors look to this area for a lot of return. And so typically they think of this as an area where you can earn a premium to investing in larger cap stocks, which tend to be more stable. And so when we go back and look at the data, there was a lot of studies done back in the early 80s. You look from 1927 up to the 1980 period, they discovered this small cap premium. It was like a 3% return. And so that was a very attractive relative return on an annual basis that people were attracted to. But it has been an interesting phenomena. Since that time, we've actually seen this small cap premium dissipate. And so from 1980 up until now, it's been about an equal race between small caps and larger cap stocks. And then in the last decade, we've actually seen larger cap stocks outperform smaller cap stocks. And so it's really been a shift that way. But we think it remains a very attractive part of the market, but you do need to be more selective. And so what we've been seeing from an investor perspective, people are more selective on their allocation to the asset class. And then within the asset class, people are more selective on which companies that they are going to invest in, because they're really looking for those exceptional return type profiles that can be found here.
Sounds, Tom, like in other words, it has made your job a little harder.
It has made it a little bit more difficult over this past decade, yes.
So I wanted to jump to something that you alluded to, and that is the many steps you have taken your company through. You were instrumental in building this company from a small academic spin out to what is now a leader in the field. And you led this company through raising venture capital financing, initial public offering on NASDAQ. You did subsequent underwritten public offerings. You had 2 major partnerships. But I guess what I wanted for you to share today is if you could walk us through the journey, and in particular, why did an IPO make sense for Applied Genetic Technologies?
Well, thank you for having me on the panel, Sebastian. I'm happy to talk about that. The journey I did touch on in my introduction. So AGTC was a small academic spinout started by some researchers at the University of Florida and also some from Johns Hopkins University about an idea for a new way to treat diseases that are caused by genetic defects. So this is a big idea. This is a sea change in how we think about producing products to treat patients who have no opportunity at this time, no treatments for them at this time. And so they were quite excited. The world has become very excited about these new kinds of genetic treatments. But what you must realize as even a very small company, when I first joined the company, I was employee number 2. So we truly were the definition of small with only 2 people. What you must realize is that to get a product to treat a human disease from that idea all the way to patients takes a very long period of time and a great deal of money. And it is very common for biotech companies, as we are a biotech company, to first go through some grant rounds where we get some grant funding from places like the NIH, from places like the FDA to really make those initial experiments, to get funding from patient advocacy groups, to get sometimes co-sponsored funding from the academic groups that we work with, such as the University of Florida and Johns Hopkins, and then to go to the venture capital firms to raise money to really do some seminal work with animal studies, toxicology studies, maybe even the phase 1, the one of 3 parts of clinical trials that you have to do. But at some point, for every biotech company, the amount of resources you need to be able to develop very safe products, to manufacture the safe products, to conduct a comprehensive clinical trial, and to prove that your product works, just takes so much money that going public is really the answer. You just can't continue to attract grant funding at that level, to continue to get private funding at that level. And really going IPO becomes the only alternative to get the amount of resources you need to take the company forward. And so that's what we did, is we undertook an IPO, and we're successful, as you said, in that IPO. When, as I said in my intro, we're now poised in the very last stage of clinical development for our lead product candidate, and really knocking on the door of being able to get our products to our patients.
Well, congratulations, Sue, on that. I know it has been quite a journey. And speaking of journeys, Tom, you alluded at the beginning of your remarks about how you've seen a change in the landscape with respect to small caps, and I wanted to use the next part of our conversation to talk about this evolution of the small cap market. From the investor perspective, before I jump back to Sue as someone who lives and breathes the raising of capital as a smaller company, I wanted to get that investor perspective. So you've been in this space for a while, and you've seen this market grow and evolve in different ways. And I wonder if you could take a few more minutes to delve a little deeper into some of these changes that you've seen in the landscape over the last 20 years, and how it has impacted you as an investor in the small cap space, looking for those returns to make this space outweigh some of the added risks that you said that come with investing in the small cap space.
Sure. I'd say probably the most notable change that we've seen is just the decline in number of public companies. When I think back to that 2000 period, there were 9,000 public companies from our count, and probably 1,000 private equity sponsored companies. And over time, what we've seen is companies go through a natural life cycle, a natural S curve. And what we've been seeing is more and more companies have gone private, or have merged, or have just gone out of business just naturally, then have been coming into the market via the IPO entree into the marketplace. And so we go back to that 2000 time frame. It was like 9,000 public companies and 1,000 private companies. Today, there are less than 3,500 public companies and over 10,000 private equity sponsored companies. And so there's been a real shift of more and more companies accessing the private market, but then staying private longer in their life cycle. And when they do come public, they tend to come public at a larger market cap. And so that's had a real impact just overall on the small cap market. We go through, we think of the small cap today as the Russell 2000. So we've got the Russell 1000 are the largest companies, and the next 2000 are the Russell 2000. And when we were back in 2000, we thought of that range of companies being a 100 million market cap to maybe $1.5 billion to $2 billion. And so think of that as like a 15-to-1 ratio. And then every year the index rebalances, and we would have like this 30-35% turnover with new companies coming in via IPO, or smaller companies that would be growing large enough to make it into the index. And today that's shifted quite a bit, where the range is now, I think, 250 million on the small end, but 7 billion plus on the high end. So those are just vastly different type of companies. So think of that range of 30-to-1. Mm-hmm. And then from a turnover perspective, because we're not getting as many companies coming in, the turnover isn't as great. And so that turnover is like less than 20% today. And so it's not nearly as dynamic of a environment that we had been seeing, but it has been changing in the last 6 to 9 months, where I think we've had close to 600 IPOs. And so we are starting to see a little bit of a shift in that market. But definitely we've seen a preference for companies to stay private longer and then come private or come public at a larger valuation. So where we can, we do try and invest in companies now that have not come public yet. So we do try and access some of those private opportunities when they're at that pre-IPO stage, just to try and increase the opportunity set that we do have.
And before I jump to Sue in the next question, maybe to drill a little more on the changes you've seen, have you noticed a change on the type of company? So Sue, for example, is with a biotech company. Have you seen a shift on the type of industries that are within that category of small cap companies?
Yes, we have. I would say over that same time frame, we've seen more evolution towards pre-earnings, more entrepreneurial companies. So you go back to that 2000 time frame, 80% of the companies in the Russell 2000 were profitable. Today, only 60% of them are profitable. And so what's happening is we are getting more pre-earnings, pre-entrepreneurial type companies, and perhaps that has to do with what's gone in the overall economy, where we've seen a lot more innovation and disruption going on. Just the advent of the internet, and the cost of computing just coming down dramatically has set off just a wave of tools of innovation that have just had an impact across many, many different industries. And so we've seen more of the old line type industries and businesses consolidate, and then more of the innovative entrepreneurial type companies coming out.
Thank you for that, Tom. And Sue, I want to continue this theme of the evolution, but rather than the evolution of the market, I wanted to talk a little bit about the evolution of your company. So as we mentioned, you had your initial public offering in 2014. And I wanted to see if you could walk us through some of the unexpected successes and challenges that you experienced since going public. And in part, what has been the most surprising thing to you?
Yeah, so before I start that, I just want to comment on a couple of things that Tom said. First of all, I would agree with him that the stage that a company is going public, especially in my space of biotech, is getting earlier and earlier in their development. It wasn't that long ago that to go public as a biotech company, you really had to have some promising human clinical trial data. And now it's very common for companies to go public that are just preclinical, and some of them are going public when they just have some kind of idea about a great new technology. And that was really unheard of even like 10 years ago. So companies are going public earlier and earlier, and investors are very interested in these brand new technologies. I think that's what gets investors excited, especially in my little world. I know it's not easily transferable to in general across small companies, but in my little world of biotech, it's that new thing. What new technology are you working on? What new twist are you working on? It's that innovation, as Tom said, that is really garnering the attention of investors.
I wanted to jump in there because I think that's fascinating, because it seems like what we're seeing two different trends here. On the one hand, in the biotech sector, as you mentioned, we're seeing companies that are doing that initial public offering much earlier. But I think, Tom, as you were saying before, in other sectors, we're seeing the companies staying private longer, which means that by the time they actually do their initial public offering, they are more mature. So it seems like in some ways, it's somewhat dependent of what industry you're in.
I think it's dependent upon the industry and what your capital needs are. So some of the companies that can stay private are not very capital intensive. They may be a software company or something like that doesn't require the same amount of capital to develop the product that, say, in biotech. And so there are just differences that way. They also may not want to go public and kind of provide the transparency to their potential competitors as to what they're doing and what they're disrupting and what their innovation is. And so they may want to stay private for a longer period of time to gain more of a competitive moat around their product so that someone else couldn't come in and disrupt them as well. Versus we see the same thing in biotech, that earlier and earlier stage, we've adapted our investment team so that we have very specialist type analysts and investors focused on that area of the market. They're very involved in the science. They get involved in companies very early. And then we take a different approach to investing in them also, where we will invest in more of them, but just in a smaller increments than we would, say, a larger type company where we have greater visibility on where the business is going and what the earnings potential will be.
And sorry, Sue, that I interrupted, because I think that was a fascinating point you made, because often we tend to paint with a broad brush and we think of all
Right.
smaller public companies to be the same. And I think this conversation has highlighted how there's differences among the smaller public companies, and we shouldn't be thinking about them all through the same lens. So I go back to you now with more specifically on your company and those challenges and successes that you have experienced since going public.
So just to put a fine point on how small we were when we went public, at our IPO, we had 13 employees. We had, and none of us had ever taken a company public. So it was, to us, our big surprise was that we were able to accomplish that. And we really were able to accomplish that through putting a good board together, hiring up our accounting firm, a very experienced accounting firm that had worked with public companies before. We transferred to a different legal firm to make sure we really had the right legal expertise, and really put together the outside consultants we needed to augment we knew our technology, we knew our product base, we knew who our patients were going to be. We could talk about that all day, but the mechanics of the IPO was very, very, very new to us. And so, we were very pleased with how the IPO went. We had a very fast follow-on, maybe not even 4 or 5 months later, where we were able to have a fast follow-on because of the excitement that people had over what we were doing and where we were going. I have to say that some of the challenges, and this is probably across the board, this is probably more across the board for all small companies, is that when you're a small public company, you sometimes are under the radar of the very investors that you really want to get in contact with. There are even 3,500 public companies is a lot, and analysts can't keep track of 3,500 companies. And so if you're smaller, you have to work harder to get their attention, and to, even when you're producing very good news and moving your product forward in a good way, if your market cap is not higher, then you sometimes struggle to get the attention and the voice and the mind share of investors. And so I think that's something that everybody going into the market as a small company needs to address. I think the other thing is the biggest surprise for me, and something that we still struggle with as a small company, and I think even big companies sometimes struggle with this, is the surprise to me was I went from a period of knowing who every single one of my investors were and being able to message to them specifically, have them call me up, I can address their concerns, I can call them up and talk to them, to a place where I have no idea most of the time who my investors are. I don't know who owns my stock. I don't know if the person that participated in the last investment still owns those shares. And the only way for me to get any kind of visibility is through the quarterly 13F filings. So, not to dive into acronyms and everything, but this is the way that some investors are required to report their holdings. But that only comes out quarterly. And there are certain parameters under which people might not have to report under 13F. So that's been the biggest surprise. And as a small, very high-tech, high-science company who would really like to be able to engage with the investors and explain what's going on with the company, really understand their concerns and communicate with them, not really knowing who they are at any given time, is something that I think many, many small business owners struggle with.
And Sue, we certainly have heard about some of the challenges that you address. In fact, we have comments in the chat now addressing some of the issues that you raised, and I hope to get to some of those questions later on. But I think it's important that we think about not just the going public, the initial public offering, but it's going to Tom's point of decreasing number in public companies. It is so important for those companies to remain public once they do the initial public offering. So now that you are in this situation where you are a public company, are there certain changes that you would like to see to the rules that would help smaller public companies like yours navigate the rules?
Well, certainly one of the main reasons that we were able to go public as such a small company was the Jobs Act. I mean, the Jobs Act made a sea change especially in biotech, and there were many companies that went public under the Jobs Act that would never have been able to do it before. The rules and the ability to relax some of the reporting requirements, relax some of the internal controls for companies. You can imagine that for a company with only 13 people like I had going IPO, never would have been able to fulfill the standards, the full standards of accounting that would have been in place without the Jobs Act. I mean, you know, we had a accounting person, a controller on staff. And so I think that was very important, and I think continuing to allow young, innovative companies to have some of those capabilities is important. I think that 13F that I mentioned earlier broadening the requirements of reporting and broadening the ability of companies to understand their shareholder base and not have shares traded through, and sometimes very large numbers of shares traded through agencies that we have no visibility to. I think that would be very helpful on average for small companies. I certainly think that 404B, sorry, another acronym, but 404B is a standard of reporting and internal accounting compliance that I think is important. But for small companies, innovative companies, where what the investors care about is what is your next clinical milestone, what is the status of your IP. They really don't care how many people are checking off on your accruals on your contracts. That's not material to the company. And so I really think making sure that we continue to push on 404B requirements so that small companies can meet them. We really thank the SEC for adjusting and putting in the revenue test, because that's been very helpful. We think that that's a good basis to build upon. But another thing that's kind of unique to the biotech space is that because we're working on things that can become very heated and very exciting, like you release some clinical data in a new indication that there's no other product for, and the data looks very good, you can be a small company, like 50, 60 people, and have a valuation that looks to the world like it's huge. Oh, this is a huge company. They have a $2 billion market cap, but it's because of the interest and the excitement about what the future of that company is. So even with a huge market cap, we may have liquidity problems, and the company may still be very small and can't meet 404B at that time. It would be just really incredibly difficult. And so I think this speaks to something you commented on before, Sebastian, that not all small companies are created equal. And I think you have to look not just on what the market cap is or what the valuation is, but what is the size, what is truly the size of the company, and I think that the resources the company has to try and attempt doing what they're doing has to be somewhat taken into account, because I think there's tons of small companies out there that many people wouldn't label small companies because they have higher valuations, and most of those are in the tech or the biotech space because of the promise of what we could bring to the future.
Sue, I just wanted to, you went through a list of some great items there, and you mentioned understanding the shareholder base, and I just want to let you know at the beginning of the session, we did a poll for the audience, and that was the number one issue that was flagged by the audience as priorities for public companies. So I think you have your finger in the pulse of our audience. And speaking of audience, this week we've had almost 600 people register for this forum. So I wanted to switch a little bit here and get your thoughts and advice for those in the audience. And Tom, starting with you first, what advice would you have for smaller companies looking to attract interest from funds like yours and other institutional investors?
Yeah, listening to Sue, I definitely understand the challenge of understanding who your shareholders are at any one point in time, and then having that constant communication with them, because you're constantly feeling like you're selling yourself and needing to be in front of people. The one thing I would say is investors have become more and more digital over time. And what do our investors do on a daily basis? Well, they spend a lot of time reading. They spend a lot of time reading up on companies. And so one of the things that we advise people to do is invest in your website. Have a state-of-the-art website, and on that, have your corporate presentation there and have it completely updated. Your latest presentation on what your addressable market is, what the value proposition is. Lay out everything in that so that anyone who's spending the time reading up on your company, and they will be doing that because that's where we go. That's the first thing we will do, is go and look at that and access that. And then increasingly, ESG has become a topic that's increasingly important, and we need to understand that. And so lay out what your principles are on that, where you stand on each of these elements. Lay out your governance model, have a diverse board of directors and management team, have all those elements and have it all laid out so that when that investment analyst comes in looking at your company, it's all laid out for them. All the work is there for them. They don't have to do anything, or they have to do very little to get to know your company. And that makes it quite streamlined. I think also you do have to keep up a steady cadence of communication, which is, you do a quarterly conference call. There are also investment conferences. So I know there are some very prominent biotech conferences that Sue probably attends. But when they're in person, they're actually, it's a lot for a smaller company, both from time and dollar investment to attend some of these conferences. I would say during the pandemic, what we've seen is more virtual conferences like what we are doing right here. And I think that's been a bit of an equalizer for small cap companies, because their ability to access investors is that much easier. It doesn't cost as much and doesn't cost as much time. And so I think that's going to be something going forward. But other than that communication, laying out what your game plan is and having that communication, then you've just got to go and execute on your plan. And hitting those milestones is what's going to move your stock and what's going to draw investors in. I mean, the adage from Ben Graham is, in the short term, the market is a voting machine, and in the long run, it's a weighing machine. And when you start to put up results, you hit your milestones, the market starts to find you, and they'll want to invest in your stock then.
Great advice, Tom, for all of those in the audience. Because it's an issue that we hear frequently here in the office, smaller public companies who feel like they're just not getting the traction with funds and institutional investors.
I would just jump in and highlight one thing that Tom said, and that was news flow. I think that is really important. It's something we thought about when we were planning to go public, is what was going to be our news flow after that IPO. And I think that especially for very early stage companies, having enough news flow can be challenging. In the biotech space, some clinical trials take 2 or 3 years. So what do you do in between saying you started the trial and here's the data from the trial in that 2 to 3 year time frame? And I think you really have to think that through. And so I would just echo Tom's statement about news flow.
Thank you, Sue. And I wanted to get your advice also on a slightly more personal topic, and that is that I am delighted that we have your perspective today, but the reality is we all know that the number of women in executive officers of public companies, that's not much the potential in the market. So I was wondering, for those female entrepreneurs that are in the audience, what advice do you have for them they're seeking to build their careers?
Well, first of all, thank you for bringing up this topic. I think it's a very important topic, not just for women entrepreneurs, but for minority entrepreneurs of any sort. And so I would apply my advice kind of equally. I happen to be very lucky. Maybe it's because I became a CEO when the company was very, very small. So it was more of a who did I know, and that I knew the inventor of, one of the inventors of the technology. And then our board has myself and 2 other women on my board. So we have a very good diversity of the board. And I'm very, very proud to say that over 50% of our employees are also women. And we have a very good percentage of Hispanic and Black Americans as well. I think this is something you have to work at. You have to work at being inclusive. You have to force your recruiters and people that you're talking to bring you diverse candidates. You have to be willing to look outside the box as to the character of this person that might be missing a specific experience that you thought you wanted, but they have a breadth of experience. And then my advice to women and other minorities is network. You have to be aggressive in your networking. You have to be the one that walks up and introduces yourself and asks another person's name. You have to not network. I always give this advice. There's lots of women-only networking groups out there, and I think they're fine, but that's not going to get you thrust into the thick of things. You have to network outside of your comfort zone. You have to network with the people that are going to be on the other side of the table from you. And then, another thing is to be persistent. Don't give up. Never let somebody, dismiss you. Try another avenue, try another angle, or find another person in that space. I think that also making sure you have broad experience. Taking different jobs. It's kind of like, this is kind of old fashioned, but in big companies, the old fashioned way to get ahead was to have a stint in operations, a stint in sales, a stint in finance, and then that broad cross-functional experience would help you raise up the ladder. I think the same thing can be said in entrepreneurship. The more different kinds of skills that you can add, the more attractive you become, and that kind of overwhelms maybe that you're in a minority position. And this also goes for education. I have a degree in biochemistry and a degree in marketing. So it's very different side to the spectrum, but means that I have a well-rounded outlook and different ways to look at things. And then I think the final thing, and this can be hard, especially we've talked about on the Small Business Advisory Council before, that many times as a minority raising money in the venture world, or even raising money in the public markets, everyone on the other side of the table from you doesn't look like you. And it can be somewhat intimidating, but you have to learn how to make the ask stick up for yourself. Ask for their investment, ask for them to be on your board, ask for them to provide you some advice. And sometimes that's all it takes, is for that persistence, that networking, that broad educational background, and don't forget to make the ask.
I love this discussion, Sue, and what reminds me is of how some of these themes just have move across throughout the 4 days of the forum. We've heard about this networking and the challenges of networking for women and underrepresented founders as a challenge that we've heard throughout the 4 days of the forum. So it shows how it's a topic that transcends the size of a company in this space. We're almost out of time, and we're getting questions from the audience.
Add to that.
Yeah, go ahead, Tom.
If I could just add a comment there, because we look at this also, and all the research shows that a diverse company with a diverse leadership team and a diverse board is a better performing, better functioning, better company to invest in. Also, all the research shows it.
And I echo that, Tom. And in our annual report, we had some data on that actually goes to echo that same point. As I was saying, I do want to get to audience questions, but I wanted to finish with a little bit of just in the interest of time, making it a lightning round. And Tom, I'll start with you, and I'll pose the same questions to both of you. And I wanted to get a sense from you of what would you have done differently in your journey, or if you actually did everything perfectly the first time around. What advice do you have for others that are considering an IPO or an investment in small cap companies? And Tom, I'll start with you.
I mean, the journey I've been on is the journey I set out on. So it's been pretty spectacular for me personally, but definitely as an investor, you have to constantly look forward, but you also look back and learn from your mistakes. And so I look back at the opportunities that I didn't take, or the things I didn't stick with. And so it kind of leads me to, I give myself this advice, my former self this advice, but I also give it to my younger colleagues that I mentor. I say, take more risks, both professionally and personally. You have nothing to lose.
Thank you, Tom. And Sue?
So, I talked a lot about the IPO and that it was successful, and we put this great team around us to make sure. We knew it was going to be a challenge for us, and we put this great team around us to make that successful. I think that one of the things looking back that I wish I'd done is put together a team to help us be successful after the IPO, and looking further down the road and saying, what do we need to do as a small public company to remain successful, and to have paid as much attention to that as we paid to the actual mechanics of the IPO. And I think part of that was what if I was to look back at myself at that point in time in the IPO, what I would tell myself would be to hire people for where you want the company to be in the future. Hire the people you need 5 years from now. Don't hire the person that you need right now, because things happen so fast, and things emerge so fast. And the person that you need 5 years from now is going to see the path to that. The person you need right now maybe isn't going to see the path to that future. So I think that would be something that I would really advise myself from my experience.
That is a terrific piece of advice, Sue. And like I promised, I do want to get to some of the audience questions. And Tom, I want to direct the first one to you. A question came in the chat from Faith in New York, and it relates to research analyst coverage. And her question is, to what extent have small cap companies been adversely affected by a reduction in research analyst coverage? And what do you think the SEC should do about it?
Yes, there has been a reduction in research coverage, I would say, from the large established investment banks. So there has been some reduced coverage that way, but I think there has been more coverage than made up from smaller boutique research shops that have come out of that. And then, I think a disruptive technology, the internet and the internet communities that have developed out of it, also create their own research. And so whether it's individual investors or other institutional investors like myself that are part of these online forums, they also create a significant amount of conversation, and with that research coverage also. So I don't know that it's really had a significant impact on small companies. It's just changed. And the investor base is adapting to that. I don't think of it that we go out and seek research coverage, and then based upon that research coverage, we are going to be making investment decisions. We want the information, and we can get that from the company. We'll get it from the internet. We will get it from our own work. And I think that's very accessible to many, many people, not just us. So I'm not sure that there is anything to be done there. I don't think it's been a barrier to investment at all.
And Sue, I see you shaking your head. How has it been the experience for you?
Yeah, I would agree with everything that Tom has said. We're a small biotech company. We have 6 research analysts covering us. And certainly what we see is that investors will scan what the research analysts are saying. They're scanning to look for consistency of message, and that there's not some disconnect between the analysts, or between what the analysts are saying and what the company are saying. But I don't see that there's been any issue with research analyst coverage affecting small companies.
And I wanted to get to a different question, and this one I'm not going to direct it to either of you. I'll let you take a stab at who wants to answer it. And the question came up in the context of your discussion, Sue, of taking the company public and the mechanics of that. And one of the other alternatives that we've seen recently of becoming public that has gotten a lot of press is the direct listings and the SPACs. And the question we got from Sherry in San Francisco is, what are the impacts of this recent trends on small cap companies? What are you seeing? If you could read the tea leaves, what do you expect to see going forward? Like I said, I open it to both of you if you have thoughts on this.
Well, I'll just make a short comment and then punt this to Tom for sure. I am not an expert on SPACs. I would say that as an entrepreneur, you're still going to have to go through diligence through the investors that put the money into the SPAC. You're still going to have all of the reporting requirements afterwards and be on the public market. So that part of it isn't different. I think that the attractiveness of the SPAC originally is that it is thought that it's a lower cost for a company to go public through the SPAC than through the traditional IPO methods. But I think that there's going to eventually be some changes there and some additional concerns. But Tom, I'm sure you're much more educated on this subject than I.
Well, definitely we have seen a significant increase in SPACs just in the last 9 months. They've been present for a longer period of time, but suddenly there's just a lot of interest in it. And I don't know if it's just because the markets are as ebullient as they are and it's allowing people to raise this money. But like Sue said, I think it's an easier way for a company to go public, and it's a way for investors to invest with a management team, but there's also cost to it to investors. There's a significant promote that goes to the sponsor of the SPAC, and then if you invest in it in its initial offering, you really don't even know what you're buying. You're just investing in this company and giving them cash, and they're going to go out and try and buy something over the next 2 years, and so you don't really know what you're going to be getting in the end. And I don't know if that's really investing or not, but so I think the jury's still out on the success of that, but I understand why people are doing it. But from our perspective, we want to know what we're investing in, and so we'll oftentimes wait until they have actually identified the company, do our due diligence on it, and then look through the economics of the deal, including that promote that's involved there and whether or not we want to participate.
Super interesting. We have time for one last question. And I wanted to talk about the market volatility that we saw earlier this year, which of course can have an impact on the cost of capital. And Sue, you mentioned in your industry in particular how capital intensive it is. How are you thinking about volatility and cost of capital from the standpoint of your company? And then if I may pose a slightly different question for Tom, what are you seeing from a big picture perspective as an investor?
So I would say that we certainly are very concerned about market volatility from two different perspectives. One, it is certainly true in my experience and in talking to others that market volatility tends to affect smaller companies even more, especially in the biotech space. And also there has been, specifically in the biotech space, increased volatility right now because I think that with the positive news of the economy opening back up and us and the biotech industry having developed a vaccine that is really proven to be very efficacious, people who had put money into the biotech market thinking that was an engine of innovation, some of them are rebalancing, and there's a lot of money went out in the early part of the year, came out of biotech. So as a small biotech, even a mid-sized or large biotech, we're usually in the kind of cadence of having to raise money every year. You usually raise money about once a year. And so this volatility for this year and going into early 22, I think all of us are concerned about that and thinking very carefully about funding mechanisms over the next 12 to 18 months and watching the markets very, very carefully.
And Tom, from your perspective as an investor, how does volatility impact your thought process?
Well, definitely with the onset of COVID, it pushed the entire global economy into a severe recession. And the stock market reacted to that. And so the most cyclical, economically sensitive businesses really traded significantly lower. And then as investors, then you start to look at your overall portfolio. And this is why I think Sue has seen some rotation out of certain type of growth stocks or that are viewed with a longer duration into the more cyclically sensitive names that got knocked down, 50% plus. And because they were a better value in the marketplace. So that's a natural rebalancing that the market will do. And now what we're seeing is taking place is the market is seeing that the economy was going to reopen. It was going to get better. And so cyclical stocks have rallied pretty significantly, and they'll probably continue to as long as the economic growth continues at its pace. But at some point, we'll see that rebalancing coming back towards either more growth-oriented names or more stable type businesses. And so for businesses that need to raise capital on a regular basis, that is something that needs to kind of be taken into account in your capital structure. The what if we do have a exogenous event that happens in the economy, in the market, that's going to limit our ability to access that capital that we need. And so that type of planning, I think, just needs to be built into a capital structure.
Well, I wanted to thank the two of you for this fantastic panel. I couldn't think of better perspectives to cap this week-long Small Business Forum. And in particularly, just looking at the chat, wanted to highlight for you how much the audience has appreciated your insights, and in particular, Sue, your comments about diversity and inclusion, as well as Tom's, your notes on the economic importance of diverse teams. So very much thank you for this insightful discussion today. And I am going to now invite Martha to close it out for the week. Martha?
Thank you very much, Sebastian. You did a fantastic job. And Sue and Tom, I could not think of a better way for us to wrap up day 4. Your insights were spot on everything from the most technical of securities matters to big picture advice on diversity and inclusion with actionable takeaways that I think we can all learn from. One of the hallmarks of our forum is that you have an opportunity to influence capital raising policy and weigh in. This is not a webinar where you just passively listen. This is something where you get to talk to us about policy. The poll that you see on the right-hand side of your event page shows feedback that has been submitted by you and other audience members in advance, as well as during today's event, which our team has consolidated to present to you in an easy-to-use polling format. As a reminder from the first few days of the forum, based upon your feedback from prior years, we changed the structure of the forum to be more inclusive as well as efficient with your time. So rather than having a long series where people come on and off mute and talk about recommendations, we asked for you to send us ideas in advance. We have consolidated those, put them in a poll, and all you have to do is take a few minutes to vote on those. With the polling module, we're asking you to rank the recommendations that you think Congress and the Commission should prioritize. Choose your top 5 and rank them in order, with 1 being the most important. The poll is going to remain open for 30 minutes, even after the video stream ends, so that you have time to go through those recommendations and make your selections. Final policy recommendations from you will be sent in a report to Congress later this summer. And as a registered attendee, you will automatically receive an emailed copy, and it will also be posted on our website. As you get started with voting, I want to thank you, our audience members, and our wonderful speakers who have committed time this week to improving capital formation policy. As I highlighted on Monday, 40 years of the Small Business Forum is a testament to the value that you bring, as well as entrepreneurs and their investors building the markets that we want to be a part of. While Time Magazine's Man of the Year as the personal computer in 1982 was somewhat of a foreshadowing, I doubt that anyone thought in 1982 that 40 years later we would all be sitting in front of our computers, whether in an office, on the sofa, in your personal home setup that might be in your bedroom in the midst of a pandemic, or from a vacation destination, all miles apart, yet collaborating in real time. Entrepreneurs and their investors made that happen. You've had a role in making that happen by weighing in on policy. So I want to thank you for spending time with us this week. In closing, I also want to thank those who made this event happen, including our commissioners, our colleagues within the commission, and our advisory planning group. And most importantly, I want to recognize our team who you see on the screen. They made this happen. Thank you to the team. You're a complete delight to work with, and I cannot imagine a world without you as colleagues, even if we are all far apart. If you have ideas or suggestions for next year's forum, I want you to reach out to us. Tell us. We take them into consideration, and we would love to make sure that this remains an impactful event. Email us at smallbusiness@sec.gov. And as always, don't be a stranger. You have advocates in DC here who are working for you. Thanks, everyone, and have a wonderful rest of your week.
The 40th Annual SEC Small Business Forum has concluded, but voting will remain open for another 30 minutes. Please take your time prioritizing the recommendations, and thank you very much for attending.